It's Janet Yellen versus the Banking Committee of the United States Senate. Who you gonna bet on? Investor Beat starts now. Thanks for watching. I'm Chris Hill. All eyes on Capitol Hill today as Janet Yellen began her confirmation hearings to be the next head of the Federal Reserve. On Wall Street, the Dow was doing its best to stay afloat, as one stock was doing its best to drag the index down. We'll get to that in a moment. Joining me in studio today, however, Jason Moser and David Hanson. Guys, our top story. People who think retail is heading for a bad holiday quarter got some more ammunition today. Wal-Mart's first quarter revenue was light and same-store sales were down. And Kohl's third quarter profits were down, as were same-store sales. And I should mention, Jason, both of them cut guidance. How bad is this?
Well, we've talked about this a lot over the past month, really. It's kind of prepping up to this holiday season. It seems like there are a lot of red flags out there. And I think these are a couple more. You know, just look at the juxtaposition between Macy's announcement yesterday versus Kohl's and Wal-Mart today. I mean, it's plain as day that the lower income consumer is definitely having more trouble dealing with the headwinds in this economy. You tack on things like the government shutdown, the raise in Social Security tax, the cutback in food stamp benefits. I mean, I think it's very reasonable to think that it's going to be a slow holiday season, especially for the Walmarts and Kohls of the world.
Is this at the point now where if you're an investor and you have stocks on your watch list, should you just take the ones that are in the retail sector and just put them off to the side, at least for another quarter or so?
I don't think necessarily. I think some, like Kohl's, like a JCPenney, obviously JCPenney's in a really bad spot, but you know the sports analogy, they're saying, what's that team's identity? I think like those companies don't have a good identity. What are they really trying to do? But I think there are retailers that still do have good identities out there. We look at a Nordstrom, caters to the high end like a Macy's. But also on the low end, you can succeed in a company like TJX companies. They control TJ Maxx, Home Goods, Marshalls. That caters to the lower end, and that company's been doing great the last couple of years. So I don't think it's the whole industry. I think these big guys like Kohl's, JCPenney are kind of just the bad ones of the group. And
JCPenney, the silver lining, I guess, is they've got those December comps from last year that they get to roll over.
Always nice.
They got an easy comp coming up. When you look at shares of Walmart, are you interested at all, even if it's just for the dividend?
You know, for me, I've basically framed it this way. So I look at Walmart. I think Walmart is a great stock to look at for folks who are considering an investment that will protect their wealth versus someone who may be younger in their investing life and they're looking to grow their wealth. So, you know, to put it at opposite ends of the spectrum, you know, maybe a younger investor looking to grow their wealth would look at something like an Amazon because there is a lot of growth there. Maybe an older investor might be looking at something like a Walmart for dividend income because I think there is legitimately plenty of room for Walmart to still perform very well. They're the king of retail, bringing in $450 billion plus dollars in sales every year. So I like the stock. I think it just depends on what stage of your investing life you're in, really.
All right, let's get to some of the day's movers and shakers. Cisco Systems single-handedly dragging down the Dow Index after disappointing first quarter results. The tech giant warned the second quarter will be even worse. So I guess there's, you know, that's a sneak preview of coming attractions.
Yeah, I mean, not a good quarter, but I don't think this is a time to freak out and rush out and say, I'm tired of Cisco, I've had a good run, I'm out after today. I don't think that's what you should do here. But there were some things, some red flags that came out in the report. So I think, as with any stock that you own when something like this happens, if you go back to the original thesis and say, what does the valuation look like today? Is it still reasonable? Do I still like the stock? So don't freak out. Go look at the actual company's numbers.
Clean Energy Fuels getting a boost after announcing a multi-year deal with UPS to supply natural gas to private UPS stations in Texas. It seems like kind of a big deal.
Well, Chris, I mean, I'd be lying if I told you I wasn't thrilled with this news. As a Clean Energy Fuel shareholder, I love to see this kind of stuff. And to me, really, the interesting thing about this company is they're not only, you know, doing what they're doing in their space in the natural gas realm, they're the only ones doing what they're doing. And what I mean by that is they're building this America's Natural Gas Highway to cover essentially the entire country and really bring in the trucking industry. And what we're seeing results of that now. So the deal with UPS, they're getting deals with Procter & Gamble, with Waste Management, with FedEx, other companies like that, and they continue to build out this network of stations. When you have a guy like T. Boone Pickens really kind of keeping the engine running there, so to speak, I just don't see why this company won't succeed. I think there are a lot of reasons to think there may be some headwinds in the near future because it's very capital intensive building out that network, but by far and away, I think this is a great energy play for the next decade. I'm going to be hanging on to my shares for some time to come.
Facebook up slightly on reports the social network will get to keep the $3 billion it offered to buy Snapchat, a photo sharing app that is all the rage with the kids. And I should mention, David, has no revenue whatsoever. Are they out of their minds walking away from a $3 billion check?
I don't think so. And we talked about it on today's Market Foolery when we went in a little more in depth. What does Snapchat do? I thought it would have been a pretty good acquisition for Facebook if they did actually go through with it. The stock's up. I think the company kind of said, okay, we'll move on. We have other ventures out there that we can do. So maybe it would have been a nice get for Facebook, but they're fine without it.
Tile Shop Holdings down more than 30% after short seller Gotham City Research said the home improvement company used fuzzy math to inflate earnings. Accounting problem. I mean, there are problems, and then there are accounting problems, Jason, and we can only speculate here, but if this is true, this could be horribly damaging to the company.
Yeah, I mean, there are a lot of bad things in this report. I mean, I think the only thing missing was maybe claiming that Tile Shop Holding was a subsidiary of Vandelay Industries or something like that. So, I mean, then we know there are big red flags there. But, I mean, you have questions in regard to earnings being overstated by 200%. You have questions of management being, holding some relations to suppliers in China, one of those suppliers actually being an employee of the tile shop, questions of accounting. I mean, there are a lot of accusations here. So even if none of it's true, even if only a little bit of it is true, there are going to be questions as to how really transparent management is in this case. I look at something like this and I think, well, I can buy tile at Home Depot or at Lowe's too. So, I mean, I don't know necessarily what the competitive advantage is there. I think if you own shares of Tile Shop today, you might as well just hang on to them and see how this plays out unless some more bad news hits. But I would definitely not be buying on this dip.
All right, that's going to do it for today's action. Give me a stock I can put on my watch list.
Putting it on your watch list, not saying buy. So important.
That's why it's a watch
there.
list.
It's a watch list, Chris. Don't forget it. I'm going with Fannie Mae. It's in government conservatorship, so this isn't your run-of-the-mill company. Bruce Berkowitz, Fair Home Fund manager, came out with a big proposal with him and a bunch of other Wall Street guys saying, hey, we're willing to buy parts of Fannie Mae and really change the industry. So it's an interesting story to watch. Maybe watch the stock just to see if there's some fireworks there, but interesting story.
What do you think the timing is on that in terms of Berkowitz and company and when that may either fall apart or come to fruition?
His proposal was for it to close in the middle of next year. I think that's very, very optimistic. If the structure of Fannie Mae and Freddie Mac change within the next 5 years, I'll be very surprised.
All right, Jason, what about you?
Yeah, I'm going to be keeping an eye on National Oilwell Varco. It's a company we talk a lot about. We own it in Stock Advisor. We own it in Motley Fool 1 and the EP. We were talking initially about how they're going to be spinning off the distribution side of this business, and that's going to become its own entity. So that was an interesting story of itself. Now we found out today that the CEO of the company, Pete Miller, is going to be stepping down. He will assume the chairmanship role at the new distribution spinoff, and then the current CEO of National Oilwell Varco, Clay Williams, will be taking over as CEO. So an interesting leadership change there, and we're really trying to get a better grip on, what parts of this business we want to hang on to. Do we want to get rid of one or the other? The distribution part is definitely the low margin side of the business, may require a little bit more attention, but it's an interesting story to watch play out.
All right, for Jason Moser and David Hanson, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.